Alright, hi everyone, welcome back to PKFX YouTube trading channel. Today is Saturday, the market is closed, so we would be doing our usual weekly game plan. So I've already listed down the pairs that I'm interested in for trades for the upcoming days when the market opened back again. So without further ado, let's start off with GBP USD. So GBP USD is one of the trades that I say that is a potential entry that I've already entered, and currently we are actually in profits. So right now at the 4-hour candlestick, you can see over here. In fact, let me just go and show the 30 minutes candlestick. If I zoom in for the 30 minutes candlestick, you can see that I predicted the market to be making a pullback before a push higher. And the reason for this was because in the daily candle, I actually saw this, triangle, kind of like a triangle structure that usually whenever it breaks out, it goes all the way to retest the previous high. So in my opinion, this was a very good risk to reward. Obviously, there is always a risk of the candlestick to pull back to retest this triangle pattern before confirming the breakout and eventually moving up. Since I saw the past few days have been building a potential strong momentum upwards, hence I decided to enter this trade. In fact, this was one of the trades that I was talking about previously. And now going back to the 30 minutes candlestick, and if I zoom in, I set a buy limit over here, and you can see that this was actually a sniper entry, as the market, if I really were to zoom in, the market literally came here up to the peep value and triggered the buy point. And after triggering the buy point, all the market did was literally to move up. So in terms of entry, I believe this was indeed a fantastic sniper entry shot. However, the market can always, as you know, do whatever it wants, right? In fact, over here, you see the 30 minutes candlestick, right? In this continuous sell momentum, the market actually reversed over here, turning it back to a buy momentum. So here was this was the lower high, lower low, lower high, lower low, all right? And then at this point of time, market did not make a new lower low. It didn't break over here, but it broke this lower high, this previous lower high, right, over here, eventually shifting the structure of the 30 minutes candle, making this as the new higher high, this as the new higher low, made a new higher low, higher high, and it made the higher low. So we entered in a very fantastic position over here at a higher low, and the market continued to make a new higher high. And obviously at this point of time over here, you can see that the market did break below, but at nowhere did it come back to any of our stop loss region. And I believe the reason for that was because we also have a 1.34 thousand round psychological number over here, and this entire base of support was also acting as a good support. Our stop loss is way below the support and way below all this structure, which was a good point. And if I go to the 4-hour candlestick, you can see that the market had a fantastic rally, a break above, and then when it came down, it didn't really come all the way down. So there was always a risk of the market to retest the previous structure point, which is over here. This was the higher low, this was the higher high, this is the previous structure point. Market always can come back down, but I did see the 4-hour EMA rising up, and the 2-hour EMA at that point of time was also rising up. The 1-hour EMA was also rising up. At the point of entry, it was already entering the stop loss region. So I took all this as a potential support for me. There was more reasons for the market not to go down but to trend up. And that's trading, right? It's all about the probabilities, right? So I have more reasons to say that, hey, this is a good region as a support. And then when the market, after making a good move up, it took so many candles to pull back down before making the next move up. And when the market made the next move up, I decided to break even on this trade. So I moved my stop loss to 1.34100. So at this point of time, this trade is pretty much risk-free. I know there is this concept of setting the stop loss when you accept the risk of willing to lose the money. But I also do believe that whenever you get an opportunity when the market has already rallied up at a reasonable amount, it is always a smart move to bring your stop loss into a break even or potentially a small profit, so that you have saved up this capital and now this trade is purely risk free. At any point of time, if this trade comes back down, it's okay, it's fine. You can always use this capital to reinvest into another potential trade. You never lost the money. So you're at an edge and you remove the risk out of it, it changes the psychology of the trade itself. So now, when the market opens, obviously this trade can dump down or go up. I'm betting that the market is going to continue to rally. As you can see, the 4-hour is bullish, right? The daily candlestick is also bullish. This is your higher low and it just made a new higher high, right? And it's probably going to continue to make a new higher high. Any sort of pullback, I'm expecting it for this support and resistance zone to hold before it can continue to rally upwards. Now, to be very honest, I'm expecting this trade to run all the way up here. That's a crazy risk to reward of 1 to 12.5. However, it really depends, right? Market can always turn back to come back and retest this support or do whatever it wants. So is it smart to continue to hold up to 12.5 risk to reward? Probably not. The best thing to do is to trail the stop loss since you're already in profit for this particular trade, and that's exactly what I'm going to do as the market continues to rally, forming a very nice structure in the 4-hour, right? Whenever it makes a new higher high and a higher low, ideally I would want to move my stop loss to secure more and more capital, or I would say to secure more and more profits. So any point of breakout and a retest of this support area over here would be a good entry point. I would consider 1.34500 ish, somewhere around here, which is another round psychological number, to be a good entry point. So let me just copy paste and I'll move this to 1.34500. That's another round psychological number. So if any pullbacks and then another breakout, this would be a good entry point in my opinion, depending on the risk to reward, right? So that's GBP USD. We have weekly bullish, daily bullish, and 4-hour also bullish. So that is the ongoing trade. Next is CADJPY. So if I go to CADJPY also interesting. The weekly candlestick is bullish, so you have your higher high and your higher low. If I go to the daily candlesticks, right, you can see almost similar pattern over here, the triangle kind of structure. In this case, it broke out and retest and confirmed and now made the move upwards, and it closed above my daily support area. And the daily EMA is also coming in as a support. The round psychological number 115 also acting as a support. So more reasons to continue to move upwards. And if I see the 4-hour candlestick, I see that it has formed a higher high and a higher low, right? So weekly bullish, daily bullish, 4-hour is also bullish. The only catch here, if I zoom out to the weekly candlestick, I can see that the market is pretty much a very high point. So at any point of time, you see this candle over here, this massive dump can happen. So we got to be trading at our own risk, and that is why it's very, very crucial to set the stop loss to say that in case such a massive dump happens, you are only risking the amount that you have already allocated. So any sort of pullback to retest the previous structure point over here, and if the EMA holds and if you see the market is moving upwards, this will be a good entry point for CADJPY for a buy. So that's my plan. Next, NZDJPY, you can see very similar structure as well. If I go to the weekly candlestick, right, the weekly is bullish, right? This is your higher high, higher low. Market made quite a bit of retracement, but the last week it made a very strong push upwards. Last week was bullish, and daily is bullish, higher high, higher low is also bullish. I believe the market may come back to retest this particular structure point area that can act as a base now that we have already broken above, and coming back to act as a base, as a support before making the push upwards. And if I go to the 4-hour candlestick, you can see this is the structure that I'm aiming for. So GBP USD, CADJPY, NZDJPY looks almost similar. Whichever trade that makes sense, you can consider that. This is my trading plan. and I see the 4-hour EMA round psychological number 92,000, sorry 92,000. It's a good place to act as a barrier for support. The daily EMA is also coming in as a support, so this may just end up being a fantastic trade. Of course, obviously I gotta evaluate this trade, and if I actually zoom out on the daily candlestick, it's not that clear of a pattern, but you can see that this has already broken out. The only catch here is if it's true that this is also forming the triangle kind of pattern and a breakout, then the breakout has already played out most of it. So if it pulls back, then you need to really evaluate if this is the best trade or other pairs may offer you better risk to reward opportunity, right? In this case over here, I still see 1 to 2.27 CADJPY. I saw 1 to 2. GBP USD was the best option for me at that point of time, was 1 to 3.75. I entered this trade. Now let's look at Euro USD. Euro USD on a weekly candlestick. All right, I can see that the market tried to reverse, formed the doji, and had a huge break upwards, right? And the weekly EMA also acting as a support. The round psychological number 1.16 thousand acting as a support. This is a weekly support area. You can see that market respected this area multiple times over here. So this can act as a very good region for an entry point. So this becomes the area or the zone of interest, of support and resistance, now acting as a support now that we have already broken above. I'm hoping for the market to have a pullback. I don't know if we'll get a pullback. Market can always rally up or market can literally dump. We don't know what it can do. But what I see is any form of a pullback and a confirmation that this area is holding and a break above this daily EMA indicates a potential entry. Just that we gotta bear in mind that in order to have a good 1 to 2 risk to reward ratio, there is another weekly support and resistance zone that can act as a resistance in this case. Now let's say if the market pulls down and then breaks above, right, this can act as a resistance, eventually pushing the market down. Now whether is this counter trend trade or a pro trend trade, we got to look at the weekly, right? So the weekly is actually a sell. Now let me check back again. Yes, the weekly is a sell. So this could be just a pullback, right? Instead of rallying all the way up here, it could be a pullback, and this pullback that we think is a pullback may just be a continuation of a sell. So the risk is always there, and that's why it's key to have the stop loss. So once again, we gotta evaluate what happens when the market opens to see if this is a potential trade or not. In fact, I wouldn't really label this as one of the best trades because the 4-hour is a buy, but in order to pull back down here, the 4-hour, you gotta understand, will also turn into a sell. So at that point of time, you'll have weekly sell, daily buy, 4-hour sell. Therefore, I may not consider this trade as one of the best trades out there. I will rank it down here below. Now, moving on, we have EURGBP. Now, EURGBP is a sell on the weekly. All right, the weekly EMA is coming in as a support. It has to continue to break downwards, the EMA, to have the momentum downwards, right? But I see in the weekly candlestick, you can see a clear head and shoulders pattern and a retest of a neckline that broke and went even beyond the neckline. So usually this sort of pattern is bearish pattern because instead of making a higher high, higher low, higher high, higher low, higher high, it actually made a lower high and lower low. So this became the lower high, this became the lower low, and then a lower high and a lower low. So the market trend is now in selling trend. Therefore, if we are selling, we are actually pro trend. The daily, if I zoom in for the daily candlestick over here, I see that the daily is also a sell despite the fact that it had a very good retracement. Now the market is rejecting. So any sort of pullback over here, I would expect to sell with the round psychological number acting as a support. Now, the challenge I see here is the EMA is coming in over here in between the TP area. So this can always act as a support and pushing me back to hit the stop loss. So it's quite risky as well. The 4-hour is also acting as a support right now. The 4-hour, in fact, it's just ranging. The The 4-hour is a buy. This is your higher high, this is your higher low, but essentially it's just ranging, and the EMA is still acting as a support. It broke once but came back up, and ever since then it's acting as a support. So a pullback may be an entry, but gotta remember that it has to break through the EMA of the 4-hour, EMA of the daily to hit your TP, which is also inside the next support resistance zone that can act as a support and pushing you back. So I wouldn't trade this if I'm 100% confident that this is a worthy trade. I would consider the first three as a better trade. So once again, this I would like to move it down as well, and we look at USDCAD. USDCAD. Now, USDCAD, the weekly is a higher high, higher low, so this is bullish, and the EMA is right now acting as a support, and we have round psychological number 1.3800 acting as a support, the weekly support area acting as a support over here. You see the structure points, it has been holding well previously, the structure points, so this is also a good area for entry for a buy. The daily, if I zoom in, currently is a sell in order to pull back to this entry point. So the daily is a sell, the daily EMA coming in as a support, which is a good indication, and round psychological number 1.3800 8,000 sorry, is holding as a support as well, and the market just bounced. And the 4-hour candlestick, if I see the pattern over here, it's also a sell. So weekly buy, but daily sell, 4-hour sell. But I understand that the daily and 4-hour change into a sell in order to have the pullback necessary to come back and retest this support before making the next move up. So if I go to the weekly candlestick again, I understand that the weekly had a good move up. It had to change the daily and 4-hour into a sell in order to come back here and reconfirm this area. It can always break down and go all the way down here to retest this area before making the move, right? We can never predict whether it's going to stop here or it's going to stop here. We just react based on what the market is showing us, right? So I believe this is a good pullback, and if the market reacts from here, this may be a good entry point as well. Like this kind of cases over here, you see the market had a strong push upwards, it made a doji. This kind of doji is very risky because the next move is severely downwards, right? This is a reversal pattern, right? But this was not a doji. It kind of indicates the market still wanted to trend upwards, but it had a pullback that I believe is necessary because it has been rallying for the past 1 month. So this week, whole week was a pullback, which is good. I believe the following week is going to be the push upwards. It can always be, another doji that forms here. So 1 week of literally up and down, choppiness here and there, wicking people out of their positions and eventually forming a doji before the following week it moves upwards. So we got to trade at our own risk. And that's why it's important to see and to wait for the confirmation that the market has indeed come down here and it's breaking above, and the lower time frame has already shifted from a sell to a buy, and then we enter, right? So weekly buy, daily sell, 4-hour sell, that's USDCAD, and I'm looking for a buy to follow the pro trend trade, USDCAD. Now moving on to AUDUSD. If I go to the weekly candlestick, AUDUSD weekly is a buy, right? Daily is a sell, right? And 4-hour currently is a buy, may break down to become a sell. And I see the round psychological number, this should be very strong, 7,000, 70,000, right? 0.70,000, which is very, very strong, in my opinion, because of the literal whole round psychological number. And the EME 4-hour is also coming back up. So I believe the market will change the 4-hour into a sell at one point of time, just to come back and retest this area to confirm that it's a good base before making the move up. Now, can the market come here despite the fact that it's a very good round psychological number, and despite the fact that there is a EME, and despite the fact that this is a support area, and literally just break down and just go through? Yeah, just one simple tweet from Trump can do that, right? So that's why you got to decide whether you're going to be relying on fundamentals or you're going to rely on technicals. I rather rely on technicals because I can never control fundamentals. I will never know what the president is going to tweet next. We can never predict that unless we are in the inner circle or something. But from what I see is I rely purely on technicals, and if the technicals is showing that the market comes back down here and the lower time frames are shifting to a buy, then this is the potential trade that I see, a 1 to 2 risk to reward to buy. And I understand that at that point of time the 4 hour will be sell, so weekly will be bullish, daily will still be a sell, right? But if I want to trade the pro trend trade, then it's going to be a buy. Now, once the 4 hour changes sell, the daily changes sell, can the market continue to sell and dump downwards? Definitely. And that's why we will set the stop loss over there to assess the risk and to limit the amount that we are willing to risk. Now, moving forward, AUDCAD, this will be, I believe, a counter trend trade that is looming up over here. Why do I say that? Because if I zoom out, this particular curvature is indicating me that the market has already bottomed and now eventually moving up. But as you can see, this is years and years in the making, right? This is like really zoomed out. And for the past few weeks, the market has only been rallying upwards, had a very strong pullback. But for this kind of rally, at least it should come all the way down here to retest the EMA before making the move up. But it decided to continue rallying upwards, so the momentum is really strong upwards, right? So at the same time, we do not want to be buying at the highest point as well, because at any point of time, the market could literally just make this sort of sudden drop. So the weekly is bullish, the daily is also very bullish, never had any sort of retracement, very bullish, right? The EMA is way down here, so the 4 hour is also bullish. It just made a higher high, right? This was your higher low, right? Higher high, higher low, higher high. It barely made a new higher high compared to this previous higher high, and the market started ranging, and the round psychological number of 0.98 thousand is holding as a resistance. So this is the reason in why I see a counter trend trade, because one, the 4 hour EMA is still far below. Two, the daily EMA is very far below. The round psychological number right now acting as a resistance. The daily EMA, in this case, this is not daily, this is the weekly support area right now. Okay, this support area, if I go all the way back, this actually goes way long ago, right? Back in 2021 was a support, and then back in 2018 this area acted as a support. So ideally this shouldn't have any sort of impact the market, but this is the only support area that I could find to make sense if we were to actually make a trade over here. Ideally, we don't want to go beyond 5 years, because the charts doesn't make any sense. Whatever that happened 5 years ago shouldn't really affect that much today, right? However, technicals is technicals, and I see some support long time back in 2018. So market may just have some sort of reactions over here. That could have even been the reason why the market stopped right here on the weekly candlestick. The market closed right here. It could have just closed above. Now, can the market open tomorrow and continue this bullish momentum upwards? Definitely. And that's why, despite the fact that the weekly is bullish, the daily is bullish, and the 4 hour is bullish, we gotta set some sort of a stop loss. And if the market is breaking the round psychological number of 0.98 thousand, it doesn't make sense to me to continue to hold this trade, because if it's already breaking this and breaking the previous 2018 resistance, market is pretty much going to keep rallying upwards. That's about it, right? But if the market decides to dump down, just this move itself is 1 to 3 risk to reward. So imagine the market decides to go and retest while this EMA is building up all the way down here, right? That's a 1 to 5 risk to reward. So the market can actually give us a very good entry point over here. So this is once again a counter trend trade to be evaluated, and definitely get a set a stop loss and risk only the amount that we are willing to risk. In fact, risk lower because it's a counter trend trade. This is one of the potential trades over here. Now, moving forward, NZDUSD, all right. NZDUSD on the weekly is a sell, right? This is your lower high, lower low. This may potentially act as a lower high because the EMA is coming in as a resistance. If I look at the daily, it has been climbing up to reach this resistance point. It broke above, but the next candle confirmed below. So this is still a resistance right now. Daily is a buy. 4 hour technically made a new higher high, higher low, higher high. So this is still a buy, right? So in order for this trend to make sense, it has to break down, make the 4 hour as a sell, retest this as a resistance, and then make the push down. And by that time, hopefully the EMA will also climb up. And the moment it breaks down and breaks below and confirms a candle closure below this 4 hour EMA, that would be a good entry point for this trade, right? So we can adjust the risk to reward, however, when the trade plays out later. Moving on. EURGBP, I believe we have already spoken about this. This particular trade, very quickly, the weekly is pretty much a sell, and we saw the head and shoulders pattern and retest above the neckline, broke above the neckline, went slightly above, and now maybe we'll have to push down, but it has the weekly EMA coming in as a support. So if you want to take profit, might as well take below that, before that. Not really a very good trade, but I still see a potential trade over here. Any sort of pullback, we can consider this trade, understanding that it has a lot of challenges to break through. EURUSD we have already discussed previously, and EURAUD. In fact, I'll put this above here. EURAUD is a better trade compared to EURGBP, EURUSD. So EURAUD on the weekly is a sell, right? When I look back into this particular chart, it's clearly a very lengthy sell that had a reasonable retracement. Looks like this area is acting as a support, and now it's pushing back down. So I'm expecting some sort of continuation to the downwards for this particular candle. After this, like this, weekly sell. Daily was a buy, right? This was a very nice, you can see the market ranged over here. So saying that, hey, I'm actually topping out over here. The EMA that it tried to make as a support was not successful and eventually turned back into resistance. And the moment it turned back to resistance, boom, down. So whoever who caught the trades over here, this was a fantastic trade. This would have been a better entry point with the stop loss above here, and you would have entered and took profits over here. But I do see a pullback, which I believe will eventually lead to another sell. So daily is a buy, but 4 hour is a sell. All right, the 4 hour EMA is coming into play over here. In fact, you can see this last week was right touching this EMA and closed below the round psychological number of 1.66 thousand. So any sort of reversal, this is what I'm expecting. In fact, I drew this arrow when the market closed itself. Any sort of lower time frame like 30 minutes, 1 hour, 2 hour, 15 minutes, this candlesticks right now, it's higher high, higher low, higher high, higher low, higher high. If it shifts the structure into lower high, lower lows, so it's creating the lower time frame, when it's creating a sell momentum, that will be a good entry point. And the stop loss, we need to make sure that we are placing above this support and resistance zone, above this EMA, above this round psychological number, so that all this will act as a resistance to push the market downwards. The good thing is the daily EMA is also above, so there is no really any sort of I would say blockage to hit the TP. In fact, this particular trade, if it goes down, it can continue to rally. Obviously, we got to see how the market evolves. So that's about it pretty much. Those are the pairs that I'm going to be closely looking at once again, just to very quickly go through. So GBP USD currently in the buy and in the money, and we're going to continue to hold this trade. CADJPY looking for a potential buy, and then NZDJPY looking for a potential buy. USDCAD looking for a potential buy, right? And then AUDUSD potential buy. So a lot of buys over here. And you gotta bear in mind that we gotta allow the market to come and give us a good entry point, right? It's not like immediately when the market opens we want to buy, right? So usually when the market opens, the spreads are high, it's Asia session, the volume will not be that much, And let's say during the weekend something happened, because we have wars, we have political uncertainties, some sort of news came out in the weekend, all this will be reflected when the market opens immediately. So my style of trading, I would allow the market to open, chill first, see how the candles are playing out. Sometimes it could literally just dump down and hit the stop loss, right? So that's why I wouldn't want to enter immediately. I want to allow the Asia session to play out, and when the London session opens up, that's when I look for potential trades. And when the New York session opens up, it further affirms the directions, right? So that's AUDUSD, a buy, AUDCAD, a potential sell, NZDUSD, if it breaks below and retests, then a potential sell, EUROAUD, a potential sell, and EURGBP, potential sell, EURUSD, potential buy. These are the trades that I'm looking at. Just a quick one, we can have a look at Bitcoin. Bitcoin has been ranging upwards. We spoke about this previously. On the weekly, it's a sell and it's currently ranging. It may go all the way up to retest this area over here from 86 to 87,000 if it goes all the way up here. Gotta bear in mind that the weekly EMA is coming down, and now this will act as a resistance, right? So at any point of time, it can always get rejected over here, or this will act as strong resistance and eventually dump downwards. If I look at the daily candlestick as well, so far the market has not really given us a very good strength that it's going upwards. The daily is also a sell. So I believe that even though the market goes up, eventually it will die down. Or if the market breaks below again, high chances it will just die down. So this is what I see in Bitcoin. So pretty much that's about it, guys. Let's see how the market opens up. And good luck, everyone. Thank you for your time. Have a good day.